Welcome back, everyone. I hope you enjoyed our last session, and we have another fire session for you all with Ella-Tamar Adhanan, who is a Vice President of Startups and VC in Emerging Markets over at Silicon Valley Bank. Thank you for being one of our partners for Diversity, Equity, and Inclusion Month. We appreciate you all. And she'll be in conversation with Allison Byers, who is the founder and CEO of Scroobious. Allison, I hope I'm pronouncing it correctly. And one of the things that caught my eye when I had a look at the website was it was about joining the human first fundraising platform. And to me, I always say we're all part of one race, the human race. So it's incredibly exciting to hear all about what Scroobious is doing as a virtual platform and community to quickly and meaningfully connect underrepresented founders, investors, and partners all on one platform. And as I mentioned earlier on, whilst Tesla has recently been reported with a $1 trillion market capitalization, we're going to be talking about the next opportunity in the $1 trillion market space, and that is investing in diverse and female founders. Ella and Allison, over to you both.
Thank you, and hello, everyone. I know many of you are sort of dialing from across the globe, so we appreciate taking the time and spending the next hour with us. My name is Ella-Tamar Adhanan. As been mentioned, I'm a vice president with Silicon Valley Bank. For those of you who don't know SVB, we pride ourselves being the bank for the innovation economy. We've been working with founders and investors supporting technology companies for nearly 40 years. And in the spirit of celebrating Diversity and Inclusion Month of October, we are super excited to partner with our friends at Startup Grind. In this session today, as mentioned prior, we will discuss the importance of investing in companies founded by underrepresented founders and the $1 trillion untapped opportunity. You know, the reason that we decided on this topic is we've seen the tremendous of really record-breaking venture investments and ample liquidity in the market. Women and diverse founders share of VC, funding, however, remains astonishingly small. The structural challenges remain and are well known for to all of us. And today, that's exactly what we'd like to talk about, the untapped financial opportunity that VCs are losing when they don't invest in these underrepresented founders. I'm honored to share this virtual stage with Allison Byers. She was introduced briefly, but I am going to introduce her as well. Founder and CEO of Scroobious, that is really building the next generation of platform community to efficiently and meaningfully connect diverse founders, investors, and partners in the tech space. Allison is committed to helping overlooked founders get in the front of the right investors with the right message, which is key. She's an MBA with over 15 years of experience building and leading data-driven startups. She has done everything from management consulting to advising Google and marketing on strategy and co-running medical device company where she raised nearly $10 million. She's been featured in Business Insider and is a frequent advisor, mentor, and speaker. So excited to have you here, Allison. Thank you very much for joining us.
I'm so happy to be here. What a great event. And if you guys were on the last panel, amazing conversation. I loved it. And thank you for having me and for the great partnership with SVB. You guys are doing so much to uplift diverse founders, and it's just great.
Thank you. And, you know, I agree with you. I also listened to the prior session, and I mentioned earlier, I took notes because there's so much information and a lot has been said, and you know, hopefully a lot will be done in the future as well. But Allison, why don't we just start by we all gave your brief of your introduction, but I would love to share a little bit about yourself and the company and what you guys are building right now at Scroobious.
Yeah, for sure. So I'm going to start a little bit before Scroobious. I'll give you my own origin story, which we had talked about being so important in that, or the panel had talked about before. But I founded Scroobious in January of 2020, which was a month before COVID hit. A really interesting time to start a company, and I'm sure we'll revisit that. But beforehand, I had launched and was co-running a startup medical device, as you had talked about. It was spun out of MIT and a hospital system here in the Boston area. And I was the one responsible for fundraising primarily at the company. And so we did raise almost 10 million, which is great. We went from our friends and family through a Series A prime with grants and bridges and everything else in there. But it took 5 years. And for me, I was really caught off guard by the challenges I faced fundraising as a woman. I'm used to being the only woman in the room. That was not an issue for me. But what I experienced from a gendered perspective just floored me. I couldn't get over it. And I also recognize that I come from a place of advantage when it comes to fundraising, right? There is a lot of positive signals associated, and I have a really strong network. And if I was hitting all of these challenges and encountering all of this bias, what about everybody else who doesn't have those advantages? It really just stuck with me. And if you're looking at it from the perspective of somebody who is underestimated, of course, we're getting a tiny fractional share of venture dollars. Everything in the system is working against us. So that company was acquired, and I spent a lot of time researching and thinking, how can I make an impact in this space? What can I do to help increase diversity and get capital into the hands of those founders who have great innovations and have great ideas and are being systemically blocked? And so there are two ways where I saw that I could help. One is in founder education, which again came up a lot in that last panel. For founders who don't come from a business background, who have not risen up with mentors and peers in the entrepreneurship space, it is not intuitive how you pitch. And even if you have been in that world, but you come from more academia or a scientific background, it is not intuitive how you pitch. It's a very different type of conversation, a very different type of process, both in terms of the content that you put into your presentation, but also how you present it and how you go about building up that network. So that's our kind of core program at Scroobious, is a scalable platform that is approachable, affordable education for everyone to be able to learn how you pitch effectively with investor-ready material so that you're taken seriously when you do go pitch. And then we're working on some exciting things on the investor side as well, but I think I'll kind of leave it there for the intro.
Yeah, that's great. I think honestly, getting your pitch deck ready and writing, or I guess conveying the right message, is a tricky thing for every founder. But obviously, it's it gets a little more difficult when we talk about underrepresented founders. So that really kind of led me to the next question, because I'm hearing your story and the journey, and oftentimes we talk about the intentionality with founders when there's something sparks them and something inspires them to start a venture. And I think obviously for being a founder is such a taxing and sort of long journey. And when time gets hard, and they will, you sort of have to come back and ask, why have I started this to begin with? And I think, with you, it's kind of clear, you going through your journey and understanding the structural barrier, not only for you as a woman, but also understanding that there's maybe a community that it can be even less fortunate or less privileged, we can call it that way. So, sort of you answered the inspiration part of it, but we're still seeing the gap, right? We are seeing the record amount that are being raised right now, particularly in the last year and a half. And obviously, you've started your journey during COVID, so challenges are no strange to you. But I do want to talk about the untapped opportunity. How do you see this, and why is it smart to invest in diverse and women founders, not just because it's the right thing or sort of the narrative of underrepresented in the market? Why is it financially smart thing to do?
Yeah, it's so important to talk about this in formats like this, in public formats, because it isn't just the right thing to do. It is the right thing to do, but it is a financially smart investment decision, right? Time and time again, research shows that diverse teams perform better. So there are tons of stats here, but just a few. Female founders were found to perform 63% better than all male founding teams. Women raise half as much as men but we return 2.5 times more per dollar invested. So we do more with less, no surprise. And diverse teams earn a 3.3 times median realized multiple when they go to IPO or acquisition, compared to 2.5 times for all white founding teams. And there are so many, right? Those are just a few that I pulled out, but there's so many statistics like that. And so what it says is that for the investors who take the time to find and meaningfully evaluate these opportunities from founding teams that are diverse and in many different elements of diversity, right? They will realize higher financial gain. It is to their benefit that we truly are, when I say we, I mean anyone who identifies as underrepresented in this space, and primarily women and people of color. We are an undervalued asset class, which is, financially speaking, an undervalued asset class, and investors can take advantage of that. So it's a smart decision. And just on the other points that you had talked about, we are seeing unprecedented amounts of capital and venture capital, but I don't believe fixing VC is the answer. And these unprecedented amounts are primarily seed stage and beyond. They're not truly early stage. They're not pre-seed or the replacement for the friends and family round for those who don't have this mythical friends and family that can just write them checks.
I like the mythical part of it.
Yeah, exactly. But they're looking for startups to be at a place where they've already de-risked a lot of the signals that that they're looking for. And to get to that place of being de-risked, you have to have already obtained some capital to be able to progress your company to that stage, right? Seed stage is different than what comes before it. And most VCs are not looking there. So I actually think a much bigger opportunity for creating or obtaining the capital you need to get your company started at the really early stage comes from angel investors and emerging fund managers, who are, or sometimes they're called micro funds. But they have a very different investing hypothesis. They have a huge amount of spending power and investing power. I think a lot of founders don't realize there are more than 4 million actively investing accredited investors in the US alone. That's not even global, right? And 3,000 of them will make their first investment this year. And they want to get in there with you. They have experience or operational expertise that allows them to identify these non-pattern matching opportunities that VCs are passing over. So it really, there is this huge white space to be able to connect what is basically a fragmented marketplace of overlooked founders with great ideas that we should have in the economy. That's the $1 trillion opportunity, right? They should be advancing our society and our economy. And these investors who want to be part of that, but aren't the traditional or homogenous investors.
Yeah, I mean, 100%. So you're really saying sort of focus on the super early stages, and we all sort of we laughed earlier about the friends and family that people are just saying so casually, and that's exactly sort of what can propel your expansion to become a little more a growth company, and then being more investable, if that makes sense, and getting more customers. I do agree regarding the emerging managers as well, and I sort of I see a more awareness to it, and I think I'm seeing more and more even Black founders becoming sort of emerging managers, and I'm seeing that diversity in that space increasing. So hopefully that's something that is being taking notes on that front. So getting back to what Scroobious does, how do you with Scroobious, how do you guys are uniquely aim to help make access to capital more equitable? How are you guys doing this with this company?
Yeah, so that's kind of going back to these two different angles. One is in the founder education, right? When you get to see like the growth we're seeing in founders who are overlooked or new majority or underestimated, pick your term here, the growth is incredible. but they are still systemically blocked from that first stage of capital, right? So that's part of why I am focused on the really, truly early stage, right? Ideation through pre-seed, or sometimes seed round. There's a blurred line there. What's a pre-seed and seed stage these days?
These days, for sure.
Yeah, because they need that. They need the smaller checks with the people that are going to also provide their time and resources, expertise, and network, right? Those are angel investors in a true sense, or emerging fund managers can be in that capacity as well. And one of the, the first ways you get that meeting, it's still the pitch. It's going to be the pitch. It's not going away anytime soon. And the pitch has become what the business plan used to be, right? Nobody writes these long, like 50-page business plans anymore, but they were good because they forced you to think through all the mechanics of your business. And that is what somebody is going to be able to take seriously when you present it. So I think, part of what we're seeing is today, this abundance of platforms that allow you to post your material and say that they have this investor of networks who will then look at your material. But if you're not providing the education first on how you present that material and what should be in it, it's really a disservice. It can be very detrimental to you if you're putting that out there in the public sphere and you don't realize that it's not investor ready, right? So there are elements of your storytelling, of how you define and quantify your problem and how you display what your solution is. But there's also things like your financial projections, like doing a bottom-up market size so that you understand what that means, identifying your assumptions that will trigger the projections so you can play around with your model. All of that is stuff that is completely teachable. You just have to teach people. So that's a core way that we're trying to make this a more level playing field or more equitable is, hey, here, like it is approachable for you, it is affordable for you. We pair online asynchronous access to learning and tools with personalized feedback from somebody who understands what you're going through and has a lot of knowledge in this space. So you get both parts of that. You get the feedback you wish investors would give to you, but they often don't, to really get founders in that confident place, both in the content that they're putting out there and also in how they are presenting it and how they are presenting themselves. All in that vein of, you have a robust pitch and you feel confident in how you are presenting it. And then on the other side of it, the investor side, we're currently building out our investor portal. And what we're doing there that's different is building a recommendation engine so that we are curating what investors see. And again, we're targeting really angel investors for the most part, so individuals, based on your own engagement with the platform, based on how you are behaving, what you are looking at that is indicative of what you might like to invest in. And we're also going to be picking up on signals of like-minded engagement and behavior so that we can establish connections among funders who can then create pooled capital, right? Whether it's SPVs or new groups or syndicates or what have you, that they otherwise wouldn't know each other either because they are their own fragmented market, to get more capital into the hands of these founders who need it at the early stage.
Well, that's really great. And the fact that it's scalable also, because you can't, you want to reach to a broader audience, and but I really sort of like the fact that you're helping founders, but also helping investors on the other side as well to tap in those opportunities. You yourself have gone through personal pitching experience, and I know that's something you're sort of good at, and you've raised nearly 10 million with the previous company, and now I know you're also reviewing the early stage investors, and as part of Scroobious, if you could say 3 or 5 key things that what are investors looking for, what do they want to see in pitch deck?
Yeah, so I spent a lot of time building up kind of our own framework of the 10 core building blocks. It's up on our website. I put a ton of content up there for anybody who's interested in what those are. There is no one size fits all, right? There is no like authority on what goes in them, and everyone is flavored by their own experience and their own interests, which is part of what makes this such a frustrating experience. But I think maybe, like you said, I'll pull out just a few that I know are important to investors that I often see missing in pitch decks. One of them is the origin story, right? any investor knows that it is going to be harder than you think it's going to be to launch and run your company. So they need to know why you did it. It is a big deal to start a company and go for funding. That's a certain path that you're doing for the life cycle of your company, right? So they need to know that when it does get harder than you think it's going to be, that you're going to stick with it, that you're in it for more than just potential financial return. Why did you start it? It is just so important to have that personal note, because at the early stage, they are investing in you. You are the steward of their capital. There is no, company behind you that they're giving this money to, and it's you. You're the steward. So they have to understand your own motivation and characteristics when it came to starting your company. So that's one. Another is the why now, both in a macro sense and a micro. So what's going on in the world, in the economy, why is now the time for what you are building to exist? It's really important. And if you bring up COVID and the pandemic, talk about how you are accelerated by it, not defined by it, right? That's a really important distinction as well. And then the third area that I often see missing information, or it's just kind of up there, but not getting to what investors want to know, is your team slide. So if you're a solo founder, if you're a small team, totally fine. But your team slide should show who have you gathered around you that is filling in for your own skill gaps, right? So where are your gaps and how have you filled them in lieu of being able to hire full-time? That's what they want to know, that you have been able to bring people in, whether they're advisors or contractors or investors, who is functioning with you in your team to execute your vision while you're being, conscious of your limited capital. That's the point of the team slide. So those are kind of three big areas that I don't see in decks a lot of the time.
Absolutely. And, looking at what's going on in the market right now, and I think in previous times, it was so difficult for honestly almost any founder, regardless of which community they come from, to tap into VC funding. It was always sort of a closed club for many. But I think I'm looking at the market right now, and I keep hearing this is the founder market. This is the founder market. Lots of money, lots of capital in the market, and it feels like the power dynamic is shifting. So I would love to hear your thoughts, drawing from your own experience. What do founders need to keep in mind when interacting with investors, when negotiating with investors? I feel like now, the dynamic is changing and it's actually favoring founders. But overall, how do you see this relationship when at the beginning and then obviously along the way?
Yeah, so I talk about power dynamics a lot, and I think in that bigger view, things are shifting in a way that they have not before, but it's going to be a slow change. And it doesn't mean that every meeting you have now, you are, the founders are just getting money all over, right? The statistics are showing that that's not true. If you are overlooked or underestimated. But when you are pitching an investor, it is so easy for founders who identify as underrepresented to immediately take on this persona of I am less than you, Mr. or Mrs. Investor, right? And you kind of shrink and you get into that less than mindset because we're used to it, and it's intimidating to ask somebody for money. And we know the statistics and the chances of our success of getting that capital, but it disadvantages us even more when we go into it with that mindset, because investors are also looking for signals of confidence. And signals of confidence include direct eye contact, right? Even if you're remote, train yourself to do what I'm doing. I'm staring right into my webcam. I can't see your expression all that well, but you're right, the audience, you're feeling my eye contact. Do that when you're pitching. Don't look down. It's a different signal. Speak in short, clear sentences. Own yourself, own your posture, right? You are offering this investor an opportunity to profit off of your company, right? Back to that financial proposition. You are not a charity. You are saying, I am building something that is going to provide outsized value at the end of the day. I'm going to take your money and I'm going to make it more. So present yourself that way because it is true. It is accurate. That is how investors make money off of their investments. It's you are creating it and you're offering them that chance. And you're saying, have in your mind, if you don't give me capital, I'm going to find somebody else who will, and they're going to get the profit, right? Because I'm going to go do this. And that's the power dynamic that should happen. There are a lot of things in the fundraising process that take away from that power dynamic or push it down. I personally really don't like most pitch competitions. I think they are terrible for founder mental health. If there's something that's making you feel less than, don't participate in it. Do something else. There's so much stuff out there happening right now. So I think, just for underestimated founders, it's so important to make sure that you have that confidence, both internally and externally, and investors will respond to it.
Yeah, I think, and I think in the prior session as well, it's oftentimes when we, especially specifically when we talk about underrepresented founders, when we talk about fundraising, it's always sort of, we discuss the challenges and it so beautifully right now, this is about returns. And, these companies are not charity. And I think, the focus should be on, if you want your returns, you should invest in me and not in representation matters. Yes. And there are such structural barriers. Yes. But I think that focusing on the financial gains for these investors will sort of, help a lot in that process. I'm curious to know your thoughts about sort of, I guess looking ahead, how do you see this shifting? How do you see making access to capital a little more accessible? And I know you've been working on your platform and I know you've been working on both sides of the coin. And I know that there's plenty of initiatives happening, but looking ahead, I guess on the macro level, or maybe if there's any details, how do you see this plays out for founders that are diverse background and for women specifically?
Yeah, so again, right, any big shift is going to take time. So I don't see a huge change happening when we have a short-term view, but long-term, I think there is going to be a dramatic shift in how early stage capital is obtained. And I've hit on this a little bit already, but we're going to see more individual investors. We're going to see more SPVs, syndicates, angel groups, whatever their function is for rolling up money, come together from investors who are disparate geographically, who have different backgrounds, and they are diverse, right? If you think about our emerging investors, emerging angels, they are younger generations. They are more diverse demographically generations, and they are being much more intentional with where they are putting their money, and they have different return expectations and time horizons. And it's going to lead to a greater chance of success for companies started by underrepresented founders, which is growing, in its own right. And it's going to provide this launch pad or springboard in a way that we haven't seen before. And it's going to position more diverse founders to be ready for the larger rounds. And by the time they get there, right, if we're thinking like generationally over time, how's this shift occurring? Those founders who see success or those emerging fund managers who see success are more likely to write checks to other diverse founders. And that's going to be its own perpetuating cycle. This is part of why I don't think trying to fix the big traditional VC shops is the answer. Yes, they have a ton of capital right now, but cumulatively, emerging fund managers and angels have more. And I think that's really going to change the landscape in a way that has not been possible historically.
Very interesting. I guess for, sort of, if you, it's more a personal question, but had you, knowing what you know now, is there anything you would have done differently in your own journey as a founder?
So it's a really interesting question in terms of COVID and the impact that it had and my decisions I've made with Scroobious. And I think in terms of what I would have done differently, I might answer it in terms of a lesson that I learned in running that med device company, where it was the traditional fundraise. It was pre-COVID, right? I was flying all over the place, and I burned out really hard a few times. And in starting Scroobious, I had my whole plan, all my planning was done to incorporate 1 month before COVID. And I'm a mom. I've got 2 kids in elementary school who all of a sudden were home all the time, and I had to teach them, right? And collectively as a society, it was a traumatic event that we were all coping with. What was life going to be now? And I made the decision based on those past burnouts to say, you know what? I'm going to build this in a way that works. And it might be slower growth. Okay, that's okay. You don't have to get into the trajectory that we see kind of on social media and in popular press of go, 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 hit these growth milestones. You're never going to get funding if you don't do this. You got to like have big revenues by year 3 and all this stuff. No, you don't. There's no rule that says that you have to do that. So that's advice I would give to people. It's advice I'm taking myself. Sometimes it is really hard to look back over time and say, oh, I didn't do what I wanted to do. I'm not moving fast enough, right? But you also have a life. You were a person before your startup. You are a person independent of your startup, and you will be a person after your startup. And that's what I wish I had done before, and I'm trying really hard to do now, is take that life perspective and say, it is okay to grow this company and fund it in the way that works for me, which is slower, but it makes me no less capable of executing. It doesn't make the opportunity smaller. It doesn't make the potential financial return to my investor smaller. It's just a different way of operating that works. And I think a lot of parents are going to have to adopt that model if they want to keep their sanity.
Love that. I do want to ask a question that came from the audience. If your own network lacks diversity and you rely on your network for deal flow, how can you expect to see startups led by diverse founders? Use Allison's platform. No, but serious and on a serious note, I mean, obviously community and, especially when fundraising, a lot of it, it's, we call it the herd mentality. People invest in what their friends invest or other VCs, and if you don't have in the community diverse people, like how can you capitalize on getting startups led by diverse founders?
I mean, go to the other communities. It's not like we don't exist, right? So you hear this all the time. There's a pipeline problem. I don't have them in my network. What am I supposed to do? Yeah, check out Scroobious, right? We launched our MVP in February of this year. We worked with over 200 founders now. Tons of them have closed their rounds. They've raised millions. They've gotten into every accelerator that you can think of off the top of your head. These are investable businesses. The founders needed a little help telling their story and getting their business plan in a place that was investor ready. And they're going to they're amazing. They're amazing founders. And there are communities like mine. There's tons of other ones. So if you really are having that deal flow issue and you want to find these founders intentionally, find out where they are and go interact with them, right? Go to Twitter. Twitter is an amazing resource for the startup economy, both founders and investors. Go contact a founder that you respect who is of an underestimated background and ask them to introduce you to their network. Say, I do investing, right? I'm an angel investor. I'd love to find this kind of founder. That's who I'm intentionally looking for. Do you know anyone? Cold email the founders and they will love it. And of course, if you cold email me and say, I'm looking for this kind of person, like, well, one, you should be part of my network anyway. But 2, I will tell you the names of people. I don't profit off of, my business model doesn't run on taking a percentage of a closed round or anything to do with the financing round. That's not how I want to play my game. I want those founders to get capital, as do almost every other founder in the space. So just reach out to where we are.
So essentially, there's no pipeline problem. There's no real deal flow issue. It's really just accessing the right communities. And going back to what you said earlier about angel investors and emerging managers, I think we're seeing more and more of that type of investors from the underrepresented communities. We're seeing more women investors, more investors that are Black or Latinx, and I think you can sort of tap into those emerging managers or those investors and sort of ask about their deal flow. It's just sort of challenge your own how do you actually go about deal flow? But I think I completely agree that it's out there. It's just needs to be, you just need to want enough to do it.
Yeah, look in different pipes.
Yeah. So Allison, as we wrap up, I think we have literally 1 minute. We sort of spoke about the opportunity, your journey, and sort of looking ahead. If you could give 3 advice for sort of the next generation of founders and entrepreneurs, what would it be?
So if I had to give one piece of advice to budding entrepreneurs, I give this advice applies in many situations, but start with your end goal in mind. So for you, if you're deciding whether to start something, what do you personally want to achieve and want out of this experience? It can't just be, I want to start a company and make lots of money, because this is a hard road, right? And the chance of success is pretty low, right? Let's just be honest, particularly if we're of the underestimated variety. But there are lots of ways to be entrepreneurial. It doesn't necessarily mean this romanticized vision that you see like on Shark Tank or in the popular press of, I'm going to start a company, I'm going to grind myself, to the bone, I'm going to raise venture funding, and then I'm going to, go to the moon. That is not real life most of the time, but nor is it necessarily the right thing to do to achieve the goals that you have in mind for your own life and the purpose of what it is that you're building. So really evaluate that and think, is there a different way that I can achieve these goals or gain the experience I want before I go out and do that big idea? Or is your big idea something that you can get so passionate about that you want to see it out in the world? So really do a deep dive internally, and don't be an entrepreneur just for the sake of being an entrepreneur. Make sure that it's the right thing for you.
100% agree. And, if I may add, before we just close this off, I think going back to what we had initially spoke about, and I'm looking at you as a founder, I think when you start that journey, and it's a long-term one, obviously we often don't talk about the failures, and we all hear the big funding announcements and IPOs, but it's a very challenging journey. And I think starting with your why are you doing this, and why are you the right person to solve this particular problem, will make much more sense. When time get hard, you can always go back to that question and sort of get the drive back again, because it's going to be, again, a long and taxing, and oftentimes people don't see the idea as clear as you see it. So I think it's the intentionality of solving the problem that you're trying to solve, will make that a bit easier. With that, Allison, I could not thank you enough. Thank you so much for being so incredible, and thank you for doing what you do. Thank you for jumping on today and sharing this virtual with me, stage with me. We appreciate taking that time, and hopefully, and I can't wait to see what you guys are doing at Scroobious, and I know you guys are working on cool stuff. So keep us posted. And I would love to thank our partner Startup Grind for this venue. And again, I mentioned earlier, I think this is an exciting time to be a founder. There's a lot of opportunities, and specifically being an underrepresented founder or women. It's all about getting that access to the right network, getting the right idea and going for it. And I think using the community and using platforms like Allison's, it will make a lot of difference in your journey. And obviously, as being an SVBers, we welcome you to, reach out to us with any questions that you have. Thank you, everyone.